Hey everybody, my name's Kyle, and today I'm going to walk you through a tool that I developed, and you'll be able to see just how much value this is going to be able to add to your investing as it has done for mine. So let's just jump right into it. So we'll quickly walk through what's in this calculator so you guys can have an idea of what to expect before we start putting in numbers. And then we'll go through each tab on a specific deal and see if it's a good purchase price or not. So first we got the input sheet, and this is primarily where we're going to be putting in all of our assumptions. It's going to ask stuff like our property purchase price, rent assumptions. And then our other input sheet is going to be related to capital expenditures. So we're going to be estimating how much we're going to be paying in different types of expenditures and repairs. So once we're all set with those inputs, we basically will be able to run the analysis and look at some of the outputs. So one of the outputs that we'll have is the property summary analysis. And this tab here is just going to show us a summary of all of the returns, all of like a bunch of different analysis charts. And then we will also get a pro forma income statement. And this is basically going to show us what we're expecting our property returns to be over the next several years so that we have an analysis of what to expect for the future. And then lastly, we have the rental analysis quick tool. So this is what I use primarily to analyze my deals pretty quickly. So if I want to look at just the key insights from putting in the numbers, this will summarize all the main findings that I personally want to know in one tab. And you could go from there. Once you like the property and you're sure that you want to consider purchasing it, then you can kind of look at the property overview, print this out if you want to like share it with friends or family or anything, and go from there. And then I also included here a key term index for, some of these terms can be a little confusing if you're not too familiar with them. So this will tell you stuff like how internal rate of return is calculated or what that means. So you can go through that as well while you're using the calculator. So let's go through some of our inputs for a sample property. All right, so I pulled up a live listing right now on Zillow for a 2-family in West Hartford. West Hartford's a town that I grew up near. So when you run these analysis, you don't need to know everything about a certain town, but you do kind of want to know the general areas that you're investing in so that you can make sure that you're not investing in an area that, maybe it's a cheap price, but maybe it's in an area that has a lot of crime. So it's stuff like that you want to consider before you're just looking at the numbers, because there's a lot of qualitative factors that will go into your purchase as well. But so let's look at this one for now. We have a property they're asking $440 for. Looks like it's 4 bedrooms, 2 bathrooms, and let's look at some of these pictures. So we can tell from the outside it looks like a pretty decent shaped property. It doesn't look like there's a lot of work needed on the outside. Some of the interior looks like it could be a little dated, but nothing crazy. The walls look like maybe they could be redone to be more modern looking, but it depends on what rentals look like in this area. So we would want to look at some comparables to see that. This looks like the second unit looks a little bit more dated as well. Maybe some new carpeting would be useful throughout the apartment. So those are important to keep in mind for some repair assumptions. But everything looks okay on pictures here. So as we look through it, nothing off the bat looks to be surprising or anything. So we'll run through the detailed analysis on this property, and we'll see if this purchase price seems to be a good price or if it's a little bit high. So we'll go back into the calculator here, and we'll start inputting all the assumptions. And this is going to be the input sheet right here that we're putting these all into. So first we'll start off by putting in the property address, and we have 2628 Fenbrook Road. So let's put that in. and this is in West Hartford, Connecticut, and the zip code is 06119. Purchase price is $439. And then, so that's the purchase price. You put that in from the listing. After repair value, this is like if you're going to add some repairs to it, you can adjust the value of the property to what it'll probably be after you finish your renovations on it. And you could see all these items broken out in the key term index over here. But for now, we'll leave it at the same number. Closing costs, these are typically $5,000 to $10,000 in this area. If you want to get like an actual estimate, the best person to reach out to would be a mortgage broker in that area, and they'll be able to tell you what to expect for closing costs. Inspection is going to be pretty similar across the board. Upfront repairs, you're going to have some costs that will come in from the capital expenditures, the other input sheet here, so we'll go into that in a minute. This here is asking if it's an FHA loan. We're going to say yes. So an FHA loan is a low down payment loan that's offered to first-time buyers, and this is how a lot of people get started in real estate. So we'll say that this is an FHA loan for now, but you should talk to your mortgage broker to get some different loan products and figure out which one's best for you. And for the down payment, we're going to put 3.5% down. We'll just assume that for now, so that we can put less down into the property and not have to spend a lot of money up front. This is pretty common right now for interest rates. This is getting recorded right around COVID time, so interest rates are pretty low right now. Mortgage term, that's going to be 30 years. And then this is when we start having to do a little bit of research here, the monthly rent assumptions. So this here on Zillow, it sometimes doesn't show the number of bedrooms in each unit. So I quickly pulled this up on Redfin, which is just another website like Zillow, and it sometimes has more detail about the property. So if we scroll down here, we could see that Unit 1 has 2 beds, 1 bath, and Unit 2 has 2 beds, 1 bath. And it looks like they're collecting right now monthly rent of $1,400. So we want to validate that number just to make sure that that's a reasonable rent, because whoever's listing this could lie and put up a number that is a lot higher than what it's really renting for just to make the property seem more valuable. So we want to double check that. So the way I usually go about doing this is by going to, there's a few websites. You could use apartments.com, Craigslist, and then there's a few other ones that basically tell you what to expect for rent by looking at comparable properties that are for rent right now. So this is, I just already zoomed into the area where the home is, and we're going to set the criteria for rentals right now that are 2 bedrooms, since that's the size of our listing. And we want to just kind of get a feel for what they're asking around here for rent. So let's look at this one quickly. So this one, they're asking to rent for $1,325, and looks like from these pictures that it's probably in worse condition than the one we'd be buying. So we'd probably be able to get rent that's higher than $1,325. And you also want to look here at the date that it was listed, because if it was like 2 weeks ago, like this one, that's like you don't want to rely on that, because that means that whatever they're asking here is probably too high if nobody is interested in it yet, because otherwise it wouldn't be on this site. So we could probably rent it for higher than $1,325. Let's look at 1 or 2 other ones quickly just to see. This one's $1,400. And this one looks like it's also a little bit dated. The kitchen looks updated, but overall probably mostly similar here. So $1,400 doesn't seem to be too far off what we'd be able to rent it for. Let's try one more just to see. $1,300. This other one back here. Let's see if there's any that are higher. $1,400 might be kind of on the high side. this one looks like a little bit like an outlier. So I would leave it at 1,400 just based on what I'm seeing here. So once we put those in, we'll put in for the first unit, which is 2 bedrooms, 1,400. The second unit we'll also put in 1,400. And you want to be careful when you're putting these numbers in that you're being accurate with your rent assumptions, because being off by 100 or 200 bucks on rent can really make a good deal into a bad one, or vice versa, because this is really where a lot of your inputs are coming from, is from this rent number to determine if it's a good deal. And then, oh yeah, and then there's another website you can look at too. It's called Rentometer Express. This is actually an app on your iPhone where you can put in your location address, and you can put in how many bedrooms you have and put in a rent number, and it'll tell you if that's kind of like based off the market area, whether or not that's a good estimate. Based, like here you could see that average prices tend to range from 1,100 to 1,500 for a 2-bedroom apartment. So that's another way that you can kind of double check that your numbers are looking okay. So then we got some rate assumptions here. So vacancy rate, this is how the percentage of the year that you think your property will be vacant due to turnover. So usually it's good to estimate 3 to 5% to be conservative. Then you have your property appreciation, so how much you expect your property revenue and expenses to appreciate every year, because with inflation these numbers do go up in general, but it's also something you want to be careful about overestimating, because when there's market downturns, these assumptions could go wrong very easily. So if you want to be conservative, you could leave these at 0. It's really up to you. And then here we're looking at the agent's fee to sell the property. Typically that's around 7% in my area, but that's important to keep in mind before you go to sell your property down the road, because you should make sure you factor in that expense in your return assumptions. And then here we're going to go through and put in our expenses. So the first one we have is property taxes. So property taxes. So usually this will be listed in the real estate listing. So if we look on this Redfin listing and we scroll down, it should be down here somewhere. I'm just going to Control F it. Yep, here it is. So $10,487 is what they paid in property taxes this year. 10,487. So we'll put that in. Insurance for a 2-family, typically in my area, that's around $1,500. But that can vary. For a 2-family, it could probably be between $1,300 and $2,000. But you can always get a quote for that. Maintenance and repairs, you want to budget in some budgetary number for any kind of repairs that might be needed as you own the property. Like toilet replacements, any kind of lights, fixtures, stuff like that you'll need to replace every year. So $1,500 is usually what I budget in here for a 2-family. And we got capital expenditures, so that's going to feed in from this CapEx other input tab, so we'll talk about that too. And then we're going to have the water sewer, and I estimate usually $150 for per month for a 2-family. So that ends up being $1,800 for the year. And then here's some other expenses you can add in. If you plan on having a property manager down the road, that's another input that you'll want to add in as well. And then lastly, we have your mortgage insurance. So if you're purchasing a property and putting less than 20% down, usually there's going to be a monthly mortgage insurance payment associated with your mortgage payment. So here it's getting automatically calculated for if you're using an FHA loan. But if you get a quote from a lender that ends up being different than that, then you could always just manually put it in here. So if it's pretend to be $250, it'll update that input as well. But if not, you could just leave this blank. And then those are all of our inputs here. And then we'll add in a few inputs here. So this is our capital expenditures. And here we're looking at things like, your roof is a capital expenditure. It's basically any kind of expenses that you're going to have that are major expenses, usually less frequent. And they're going to add value to your property by having them replaced. So, you have your furnace will have to get replaced eventually. You're going to have to do new floors every, say, 20 years. So this ends up dividing out whatever your cost of your repair is, or your capital expenditure over the lifespan. And you'll be able to see here your cost per year and your cost per month. And these are the numbers that are getting factored in to our input sheet here. So you can see that that's the same number over here. And then we have a list here of any kind of expenses that we're going to have to pay up front for repairs. So, let's pretend that we're going to redo the carpets in one of the units. So we'll add in here carpets or hardwood floors or something. We'll add in laminate floors. So let's pretend that that's going to cost $5,000. So that's going to feed into our upfront repairs number right here. All right, so I usually like to start on this tab, the rental analysis tab, just to kind of see an overview of the property returns. And a great starting point is looking at the income statement, because this will show you your cash flow, which is a lot of times, they say cash is king. So if you're going to have a property that's going to be negative cash flow every year, then it's going to cost you money to make any kind of returns. So, it might not be the best deal if that's the case. So in this case, we're seeing that we have rental income of $2,800. We're taking away this $84 for vacancy a month. And then we have all these other property expenses that we put into our input sheet that get calculated for the month. And here we have all of our mortgage assumptions and our capital expense budget. So all of this gross rent income minus all of these expenses here get totaled up to a negative cash flow of $880. So that means that if you bought this property with 3.5% down for $440,000, you're going to be paying $880 every month to have somebody else living in this property, and that's going to cost you a lot ultimately. So you might want to restructure how you're paying for the financing to maybe have more of a down payment so that you can have a lower monthly mortgage payment. But in general, that's not really a good sign if you have negative cash flow on a property. Then we'll look here. You can see quickly, how much cash you're going to need up front to pay for this. You have like your down payment, your closing costs, all these other costs up in the front compared to the value of the property, so that you're prepared at closing to have that kind of money. Then we can see here some financing. This is how much we're going to be paying in mortgage payment, our PMI. Here we have a little schedule of property value estimates based on cap rates. So, a good place to go to figure out what your market, what West Hartford cap rates might be, would be your realtor. So go and ask them, what are cap rates in West Hartford? And if they tell you, most two families in West Hartford have a 5.5% cap rate, okay, this property probably should be worth $315,000, not $440,000. So that's just something to consider as well. And here we see some of our other assumptions. So we can see our cash on cash return on investment is negative, our total ROI is negative, and our cap rate is very low, so that's not great. So basically what I'm getting out of this is that 440 is not a good deal for this property to put down or to purchase it for. So what I would personally do is I would go back and say, let's play around with these numbers. Let's see how much we have to offer for it to be a good deal. So let's try playing around with this and put in $350,000. So if we offer $350,000 for this property and our offer gets accepted, how does this change our assumptions here? Well, now instead we have a negative 20 cash on cash. We have a positive ROI, which is better, but still not great. A lot of the times when I analyze these deals, you got to do a bunch of these to see like what's a good deal and what's not. But you generally want to see a positive cash on cash return and shoot for total ROI as high as you can. But in some markets, you'll be able to see cash on cash return of 12%. In an area like mine, you're lucky to cash flow. But if you're breaking even on cash, you'll probably have an ROI here that's pretty high if you're putting only 3.5% down. But the key with this is repetition and doing it on a bunch of properties in your area, and then you'll get a feel for what's a good deal and what's not a good deal. So let's pretend that we're going to be okay with this purchase price. We're fine with these returns. Personally, I wouldn't be, but for assumption's sake, just to see how the reports come out, let's be okay with this and kind of go on to looking at what our property overview is going to look like. So here, this is a picture that you would replace with a picture of your property here. So you could easily just take a copy of this, save that image down, and paste it into your Excel document, and just kind of hide that one. So now you're able to get your own little custom report. Let's delete that back one. You're going to have your own little custom report here of 2628 Fenbrook Road. And here you're able to see how much cash you're going to need. You'll be able to see your monthly cash flow, which is negative, and your total returns, which include your yearly cash flow, that negative number, plus you're going to have equity accrual. When your renters are paying down that mortgage payment, you're seeing that you're actually accruing $7,000 of equity in your property in the first year. And then assuming that 2% rate of appreciation in that first year, will have that amount as a return as well. So total all these returns, and we're predicting an $8,700 return for your first year. We can see here your total rent income. Here's some ROI numbers. And this stuff, like, you might not know what IRR means, but that's also why I included this key term index, so that you can go back here and learn as you're building out your own, running the numbers on your own properties. You're able to actually learn as you're doing it. So looking here, we're also able to see your property returns based on different types of returns here. So cash return, you're able to see that although it's going to be negative, you'll see like positive cash flow as time goes on. You'll see your equity return and your appreciation return each year. So that's one analysis chart here. You can see your mortgage pay down. So the blue line, the blue area here is showing what your principal is left as time goes on. You can see your property value with the appreciation. And then you're also able to see here your property equity value going up in that property every year as you pay down that mortgage. And then lastly here we can see your pro forma income statement. So this is going to show you all your rent assumptions, your property taxes, all your expenses. The same thing that we saw pretty much in our rental analysis here, except that this is breaking it out into the next 30 years, and it's adding in our rental growth because rent goes up every year. So that's kind of why we factored in a 2% growth rate, is to show that these numbers are actually going up every year. And you can see kind of how your property will do over time. We see that we have a negative cash flow up front, but as time goes on, by year 20, you'll have a positive cash flow. And we'll see down here that there's a chart also laying out some of your profit margins, giving you some detail on where your profit returns will be and whether or not you're going to make money through a visual representation. So the best thing to do with this calculator, you run the numbers on several different properties, and you'll get to see whether or not a property is going to make a good return for you. And once you're set on having a property to purchase and hopefully make an offer on, you're able to select these two reports and print them out. So if we print this to a PDF for now, you're able to export it into an actual report that you can share with friends and family so that they can kind of see what kind of deal you're hoping to do. We'll save this down. and maybe you don't have $25,000 right now. So if you want to show your parents maybe that you're serious about this and took the time to analyze a property using this report, maybe they'll be more willing to help you out with maybe $10,000 if you need it, and or other investors that are willing to help you out. And this is a good way to show them that you took the time to research and run your numbers, and they're more likely to help you out in this kind of property.